We've got a very special set of guests joining us. The IT and Telecom Minister, Mr. Ashwini Vaishnaw, Ms. Smriti Irani, the Minister for Child, Women Development and Minority Affairs, and of course, the Chief of Tata Sons, N. Chandrasekaran. Thank you very much for joining us. Before I get started, again, for context, what are the big mega trends that global investors and domestic investors are looking at when they look at India? Consumption, it is going to be perhaps the largest market on the strength of the fact that we are today the world's most populous country. It could perhaps also be the workforce of the world because we have a very young population at this point in time, and that's the expectation and the assumption and the estimates that many are making. And of course, the other big trends that India could capitalize on, digitalization. And we've made inroads on that on the back of the India stack. What will that mean, not just for the domestic market, but also in terms of taking this global is going to be the question, and also how digitalization opens up the market in terms of access to credit, access to finance, the spending and borrowing behavior of the Indian consumer. Minister Vaishnaw, let me start by talking to you. As I said, there is no consensus on where global growth is headed and where the global economy is headed. Where there is consensus is that globalization as we knew it has changed. There is a reshaping of the world that's taking place, driven largely by geopolitics, which is now dictating how geoeconomics is going to work. So I want to understand from you, how is the Indian government looking at the multipolar world today, India's role in it, and specifically in terms of the roadmap to be able to get to whether it's 5 trillion or 10 trillion, where do you believe we stand on the reform roadmap? How much more work needs to be done?
Thank you, Shireen. India has approached this entire transition which is happening in the world on multiple dimensions. One, the first dimension is to make sure that India's economy is resilient. There is a good, consistent 6 to 8% growth rate for a complete decade. It's not just 1 year or 2 year kind of thing. The thought process is the thought process and the policy framework which follows is for a complete decade, 6 to 8% growth with very moderate inflation. The second dimension is when the world is looking for resilient supply chains, and as you said in your opening statement, India has a very young population. So how do we attract large number of supply chain participants to India? How do we make it resilient? How do we use our research and development capabilities? And third part, of course, the energy transition as well as the digital stack. So I'll cover all the 3 points. When the pandemic hit and the whole world was going through a very big crisis, which was humanitarian crisis as well as an economic crisis, there were 2 approaches followed by various governments. The first approach was followed by so many countries was send out checks, make sure people get money in their hands, they consume, and that consumption will lift the market. There was a whole lot of liquidity pumped in. The combined balance sheets of US Fed, European Bank and Japanese Central Bank, the combined increase in balance sheet was about $9 trillion US. That created a very quick sugar rush kind of growth, but it also brought with it unprecedented inflation. And that inflation is not going to go away so easily. It takes a time because pushing liquidity is easy, taking it out is very difficult, and it's always very painful. On the contrary, India adopted a very pragmatic approach. Fiscal space that any country would have is always limited. It's always constrained. There is no unlimited capital in the world. Anybody can give those MMT theories, but that's bunkum. Don't believe that. Capital is always scarce. Capital is always limited. How do you use the capital that you have? That's a choice that Prime Minister Modi ji made. He made a choice that very focused consumption and support to the most vulnerable groups, vulnerable sections of the population. So about 800 million people got limited financial aid, plus free food for almost 3rd year now. So that was one very important part. Vaccination, free vaccination program. Again, 1.3 billion doses in the first 14 months. By now, we have crossed 2.1 billion doses and completely done on a digital platform. The most important piece of this decision-making that Prime Minister Modi ji made was, with limited and focused consumption, focused on the vulnerable sections, he put entire capital of the country into investment in infrastructure. Now, investment in railways, last year the capex was 23 billion US. This year the capex is, this fiscal which ends on 31st March, the capex is going to be of the order of 26 billion US. Same is the story in railway, in highway, in power transmission. That increases the productivity of the country and gives us the long-term growth potential of the country improves.
So fiscal consolidation is going to continue to be a key priority for the Indian government going forward?
One very important part of this entire decision-making was Prime Minister ensured that the fiscal policy and monetary policy, they work in tandem. There are so many examples in the world, I wouldn't take any names, where the fiscal policy was going in one direction and the monetary policy was going in another. Our central bank didn't have to drop the interest rates like a brick, didn't have to increase the interest rate like a balloon. It was a very moderate, very balanced view of things. So our central bank today is in a very good position with a good balance sheet of the central government. Our central government's liabilities are just about 52% of the GDP, and GDP growing nominal at 11-12% is a very good situation to be in. So I think, yes, fiscal consolidation is a very important priority. But what is important is we have to look at growth as the primary driver, moderate inflation as the primary decision point, and combine the fiscal and monetary policy to continue that momentum for next 10 years.
Well, I'll come back to you in just a second, sir, and I will get to Ms. Irani as well, but I want to get the private sector's voice in, so let me come to N. Chandrasekaran. Chandra, Mr. Vaishnaw spoke here about capex, and for the last several years now, it has been the heavy lifting that the government has done in terms of pushing infrastructure, pushing government capex, and that really has provided the fillip as far as growth is concerned. The big question is, when is private capex going to take off? Are we at that inflection point at this point? Is it another 6 months out, 12 months out? I mean, you have, from the House of Tatas, a view from steel to consumption to digitization. At this point in time, what's the indication that you get in terms of the heavy lifting that the private sector is likely to do in capex to push growth?
I think I'll make a couple of more comments to support the view expressed by the minister. Not only the debt to GDP is currently at 52%. Just after the pandemic, it is 52% from a decade ago of 78%. So we are in a much, much better position today than 10 years ago. So overall, I think our balance sheet and our, even if you take the private sector, overall private sector debt to equity ratio is 0.5. Mm-hmm. So we are in a very, very strong wicket. Now coming to the investments, we run a large group with portfolio across B2B, B2C, industrial businesses, consumer businesses, tech businesses, traditional businesses. And the consumption that we are seeing is just fantastic, actually. We are not only seeing it in the urban areas, we are seeing it in the rural areas. In fact, the consumption we are seeing in Tier 4 towns for even discretionary items like electronics and jewelry is higher than what we see in Tier 1 towns. So the consumption is very, very strong. We have been seeing that for the last few years, and we have seen it in the first half of the year. Last year, we delivered a growth of 25% on a group-wide basis. And this year, that is the year ending March, the first half, we have already seen 19% growth. In all likelihood, will be 22-23% growth. So I think the consumption-led growth is very strong. And with the infrastructure spending that's being done by the government, will definitely add to this as a tailwind.